Hello, everyone, and welcome to tonight's session of TradeFinder Live. My name is Zach. I'm one on the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but first, as always, we have to go through some housekeeping details about the session. Rob's been talking lately about us needing more volume for the bounce to continue in the market, and as we can see, that didn't happen as the market closed lower today and below the 10-day moving average. So curious to hear Rob's thoughts on that after we get through some his general presentation and open it up to the questions. All right, first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available to be read in detail on our website, or feel free to take a screenshot if you like. That's the main point to take away. So for this session, we only have one method of asking questions, and that's going to be through the Q&A window. We are live streaming to multiple platforms on Twitter, YouTube, Facebook, and then of course our Zoom audience. So keeping in mind that the question portion is limited at the end, we'll try to pass through as many questions as we can with the time remaining. So with that, you have the option to write in your question through the Q&A. And again, once Rob gets through his general presentation, I will turn it over through a few questions from Twitter, Facebook, YouTube, whichever ones are out there. If we don't get to your question, just know it has nothing to do with the validity. We only have so much time. So take that as encouragement to attend the insiders meeting when there's a 45-minute portion solely based on answering questions. So there's a much higher likelihood that your question will be addressed in that meeting. Lastly, we have the chat window as well. Any support related queries I can handle there, or any interaction amongst other attendees, please feel encouraged to use that window throughout the session. Just one note to make for our Zoom audience: at the bottom, it defaults to hosts and panelists. Be sure to change that to everyone. That way everyone on the webinar will be able to see your message. All right, so I will get out of the way. That's all the important details, and I'll introduce the man of the hour. That's Rob Roy.
Thanks, Zach, and hi, everybody. Welcome to TradeFinder Live. If you're joining us on one of the live media services, appreciate you being here. And for those of you that are here every week through Zoom, etc., love having you here as well. If this is your first TradeFinder, what we're going to do is go through and talk about the markets, not just the US market, but the international markets as well. If you're only interested in trading the US market, I encourage you to stay tuned while we go through the foreign markets, because the international markets, all the securities that we show that are representing the foreign markets are tradable on the US exchanges. And often, if you've been through TradeFinder with us before, you've seen that there are a lot of great patterns that can be traded on the US exchanges. Then we'll go through and do a review of a case study that may have been closed throughout the week for our Elliott options alert subscribers. Slight difference between that and what we do at TradeFinder, where TradeFinder, as you can see, we look for weekly trade ideas, but you're kind of on your own there. Call them case study considerations, and then you decide if it's something you want to follow. Then you pick the strategy and follow along with it with whatever your favorite strategy is. With our alert subscription, however, we send you out an alert with a strategy for an entry, any adjustments, and exits. So that's the difference. You can find out more about it at EWOtrader.com if you're interested. And then, as Zach said, with whatever time is left after we look to see if we can find a case study consideration for tonight, we'll open up to general Q&A. That's it. That's how TradeFinder works. So again, welcome everyone. Let's go ahead and take a look at the market. As Zach said in the intro, I have been talking about this, talked about it in the live update that we did over the weekend. Appreciate the fact that you guys like those live updates and you join in at varying times on your Friday night. Appreciate that very much. Talked about how for this bounce to continue to the upside, we were going to need more volume because we haven't had it. Volume has been tailing off since the low that occurred back there on the 17th of June. And you can see that we didn't get it. Volume continued to drop off and we closed lower today. But we closed lower on not very good volume either. So there wasn't really a whole lot of volume that kicked in on the downside either. And so I submit to you the exact same thing as far as the move to the upside. For anything to gather momentum to any direction, volume has to come in at some point in time. So was today just an aberration, just a bit of a rest? Well, the issue here, I think, is the close below the 10-day moving average. Zach mentioned that in the intro as well. As you know, if you've watched, pardon me, any of my recordings, you need a second day, a follow through, a confirmation day. That has to occur. And so we'll be watching to see what happens tomorrow. If there is follow through, I believe that if we are going to close lower tomorrow, you'll see the volume kick up a little bit. However, right now, just if you're curious, the futures at this moment are up 8. So up a little bit. Can remember the days when, oh, up 8 would have been significant. Now it's like, oh, up 8, that's no big deal. And that's because the volatility is still strong. We'll look at the VIX in a minute, back above 25 on the VIX. So we'll cover that in just a second. But just as a reminder, we did hit that 61.8% wave 5 low. Asked people to say what they thought the market's bottom was in. Some of you said yes, some of you said no. That's what makes markets, differences of opinions. You can see the 10-day moving average has closed the gap a little bit on the 50. One of the rules that I follow hasn't gotten that close yet. We got closer back here in early June. So there is room for more of a bounce to the upside for that to occur, but it's not so separated now that we couldn't turn and go back lower again. We'll have a hard time breaking this low here because that is such a strong fib level. 61.8 is my favorite fib level. I think it's the strongest of all of them. But the most interesting thing of everything that I've talked about, but take the moving averages off, is you can see something is likely about to happen because we've developed a pretty decent triangle formation right here. Now, that's common following the completion of a wave 5. If you're familiar with Elliott wave, you know that when a wave 5 ends, you normally go through a corrective pattern, and those are flats, zigzags, or triangles. Any of those 3 patterns likely occur following the completion of a wave 5. So is it completed? It's still labeled down here as, I mean, we did move into this tap box, which is time and price projection by this software program called Profit Source. If you're not familiar with it, you can find out more information about it at hubb.com, hub.com. I think it's the best Elliott wave software that exists. I've tried all the ones I know to exist, and I think this is the best one, and I'm going to use whatever I think is the best because I am a believer in the forecasting abilities of Elliott wave. So you can look at this and say, all right, well, that's likely the completion then of a wave 5 because we are in a corrective pattern, but then we also have complex waves too, right? So if we break to the downside here and make a new low, that just means this is a complex wave 5 to the downside. We did have a complex 3. You can see multiple zigzag patterns on the way down in the 3. It was a mono 4. And so moving down here, we could have a corrective 5, or we could be done, but I don't think we're going to have to wait long to find out. I think in the next couple of trading days, likely by Friday, we will see some sort of a breakout of this pattern. So I think that's pretty interesting, and something that we're looking forward to. We've been a little bit on the lighter side of our alerts for our alert subscribers, just because when you have a situation like this, it's better not to guess. I've always been a fan of when you have a triangle like this, either play the strangle, which allows you to profit from either direction, or just wait and let the direction tell you which way it's going to go and trade that direction. Now, how do you know the difference? Well, we look at the ADX. You can see the ADX is only down around 20. Had that ADX been down below 15, we'd be sending out a strangle on the SPY. The ADX being low gives you an indication that you've been consolidating for a while and you're probably nearing a breakout point. With an ADX at 20, we still could break out. A triangle, I want to be real clear on this, a triangle does not have to have an ADX at 15 or below to break out. The stock doesn't have to have that. However, things that do happen is you have a setup like this and the ADX is a little higher, and then what ends up happening is you get a bit of a breakout to the upside, a bit of a breakout to the downside. You don't get two false breakouts out of a triangle. What ends up happening is you form a larger triangle. And if you've got a strangle on and you bought the call and bought the put, then time decay starts to become a problem. So we'd rather just wait. But if we have a lower ADX, it's telling you, hey, we're likely to break out sooner rather than later. So in this instance, with an ADX at 20, even though that is a really well-formed symmetrical triangle, we're not going to do a strangle on it. We're going to wait, let it break out, tell us which direction we're going to go from here. We'll look for a breakout and follow through, and then we will load up on alerts at that point in time. So that's our game plan at LA Wave Options. But just wanted to make sure that we saw this triangle that had formed a low volume triangle, corrective triangle. That's the best kind. Those are the ones that usually break with a bit of volatility. Speaking of volatility, let's take a look at the VIX. As I mentioned, let's see where we are with the VIX and bounce back above 25. I'm laughing because it just seems like now is 25 now, where the low is on the VIX. This has been fascinating to me, and I know some of our longtime subscribers would pick on me because I use the word fascinating a lot, but it is the fact that the VIX has been so elevated for so long. Go back in history and see if you can find this long of a time frame where we've had elevated volatility and we've come up to levels like 35 multiple times. And it seems like what's occurring here is the lows are getting higher. So we're forming a pretty large, we had this symmetrical triangle here, which we talked about on the VIX, and that broke to the downside. Then we rallied back to the upside, and now we're coming back down because it hit 35 again. But every time we come down, we seem to be making, this is borderline here, but we seem to be making higher lows, and maybe we're moving into a massive ascending triangle on the VIX, which could yield a really significant move in volatility. Is the triangle enough to yield a significant move? I think it's close enough that we could, but it may just be a breakout that doesn't come with tremendous volatility and we just kind of break in a direction. But I think it has the potential, but it's not necessary for it to do that, if that makes sense. So I wanted to cover the VIX for you now because of the way it ties into where the market is. Interest rates, looking at the TNX, we've been talking about this. Rates move back to the upside. So was money coming out of the bond market and moving into the equities market? Nope, it wasn't, because rates are coming right back down, which leads you to believe that it's more likely money is coming out of the equities market and into the bond market. there is a possibility, and this has been opined on some of the financial networks, that there's a lot of international money coming into our market, our bond market, buying our bonds and treasuries, and that's what's holding rates down. Remember that with bonds, you move in inverse directions. Prices and yields move in opposite directions. If prices go up, meaning that there's a demand, yields and rates go down. When there's less demand and people are selling bonds, then rates go up. So it is a good indicator of what could occur in the equities market. And so we looked at this with this nice little zigzag pattern right here on the TNX. And as you can see, we move right down to the 100% level, hit it smack dead on, also move back to the previous 4. And now we're bouncing a little bit, but can't figure out where we want to go. Now, the interesting thing here is we bounced up to the 38.2% fib level and we've moved over. Are we going to go lower? There's the possibility of a C wave extension all the way down to 161.8. I just can't fathom that there would be that much international buying to push rates down that far. In other words, I think if we break below this level here, right at 28 on the TNX, that would be an indication of money is leaving the equities market and moving into the bond market, which would then mean a likely downward breakout out of that triangle. But again, I don't think we're going to have to wait very long to find out. I think these answers are coming sooner rather than later. Looking at the dollar, holy cow. I've mentioned this numerous times. I am a fan of a strong dollar, but not this strong. When it gets this strong, it puts a lot of pressure on international companies through currency exchange rates, et cetera. They have a really hard time making money when they're getting hit with such a significant exchange rate. And we had that, the reversal with the euro, where it actually broke below break even on the euro. So I can remember times when it was 2.5 times when I was traveling. Man, it'd be a good time to go to Europe now, I guess, if you're interested in traveling. But we had this pattern here. You can see the zigzag. You can see the triangle that occurred there. Now we are right towards the middle. And I said that with this move, likely could get to that wave 5 high. We haven't quite hit it yet. So today we hit 108.42. But look at that doji. And I know currencies trade 24, just like Bitcoin, et cetera. We talk about that all the time. But there is a print time for end of day data for software programs like what we're using here end of day instead of live. And so you take a look at the moving average. So the dollar is overbought. We've got a doji. Perhaps the dollar comes back down. And if the dollar comes back down, maybe we get a little bit of a bid. Now, I've said the same thing here for a week or two, but maybe, and I talked about this in the weekend update as well. By the way, if you're viewing on YouTube or whatever, live streaming services, social media, go to our website, our YouTube page, and take a look at all of the recordings that we have there. That's where we did the live YouTube market update Friday night. And if you become a subscriber to our YouTube channel, you get notified anytime we do anything live like that, or anytime any of the recordings are posted. But same thing here, talked about how gold needed to get back above 165. It was significant that it had broken below it, and it's not going to until the dollar comes back down. I just don't see that happening. So if the dollar does pull back a bit, maybe at least we get a bounce up to label this wave 4. I don't know if we can get to 175. I think that would be an impressive move out of gold, but perhaps we get up here to this resistance at least at 170 if the dollar does pull back a little bit. The dollar just doesn't want to show any signs, though, of slowing down. That's incredible strength. And you look at the DMI, our favored confirming indicator with LA wave. Now you can see the ADX has moved above 40, which is telling you that was a very strong move. But when the ADX moves above 40, look what happens. Perfect examples here. There's one, and you can see here and here when we get these peaks and the ADX, what happens after that is you get a bit of at least a short-term pullback, and I think that's what's due in the dollar now. Not saying that the dollar is going to come crashing down, just saying that the dollar's overbought right now, and a little bit of a move down could give a reprieve to gold, and perhaps we get some sort of a bounce. Otherwise, it looks pretty ugly because that break at 165 was significant. And there's a little bit, you can see it there, a little bit of support at 160, but it was nowhere near the significance. Look how far back 165 goes as far as support. That was significant support that was broken, and it just went right through it like nothing. And so now we're coming down. Can 160 hold? Again, without the dollar, it's not going to, but we'll see how that plays out. I do think the dollar does need to weaken just a bit. So let's go ahead and take a look at some of our other markets along those lines. And look at the DIA. You see the DIA back down to 310. That's an important area for it to hold. Also, a bit of a triangle forming here on the DIA as well. And this one's really interesting because you can see the triangle is right at that 310 level, which has been support and resistance going back to May. We bounced off of it, went up to 330, came back down, broke it. You can see how we've been bouncing back and forth around that 310 level and slowly congesting down into a triangle there at 310. So we'll see if the Dow follows the SPY, which it likely will. And it looked like it tried to sneak out of the downside, but that doesn't count as a breakout to me because that low is still higher than the low back on the 5th. So it's just forming a really nice triangle here, consolidating triangle right there at a major point of support and resistance. So pretty key there if you're looking at trading the Dow. Let's look at the Qs. So when we look at the Qs, see that we had talked about this in the weekend update. Could the Qs be a leader? Some were saying that, hey, look at what's going on with the Qs. They're outperforming. Well, didn't happen. Didn't even make it back to fill that gap there at 300, which we were getting there. Looked like that's likely to occur, but it hasn't. It came back down. A little bit of a triangle here as well. Not as well formed as the triangles on the SPY and on the diamonds, but nonetheless, you have to look at that and say, we have higher lows and lower highs. So it is a triangle, just maybe not quietly as uniformly formed as the one on the SPY and the Dow, but the wave 5 down here to 118%, could that extend lower? That's just a bit of a scary number. When we had a 61.8% wave 4 corrective move, you look for 100% extension. If you break that, you often go to 161.8, which would mean a much lower low there on the Qs. So clearly that would occur with a downside breakout out of the SPY as well. Looking at the Russell, the IWM, you can see pretty decent triangle here, actually, kind of right in line with the triangles on the SPY and the diamonds. That's a pretty nice one with the lower highs and higher lows. And when I say that, I'm looking for touches of the line. The more touches of the line, the better the triangle, in my opinion. So we're right here at a 38.2% wave 5 extension that held at least for a little while. But can you see how the markets are all looking like something's getting ready to happen? So we're going to get a directional breakout move. Not much has happened over the last month. Look, we're pretty much exactly where we were in mid-June, and now we're moving into mid-July. So roughly nothing has happened in the markets in the past month. And that's the most frustrating time in the markets, isn't it? Is when the markets just consolidate and don't go anywhere. And how amazing is it that the markets have gone nowhere for a month with the VIX above 25 for most of that entire time? These are really unprecedented times. You've heard me say this before. I'm not gloating. I'm just saying it. I've been around a long time. I've been trading options for over 25 years. And I never say, because I've been around a long time, that I've seen everything. And there's a reason for that, because as soon as you say that, the market's like, oh, yeah, well, have you seen this? And then something unusual occurs. And this is one of those things that I haven't seen before. I haven't seen this elevated of a VIX for this long. And I haven't seen triangles form when you've got elevated volatility. Usually the volatility is coming down when you're forming triangles like this, like significantly down, like down around 20 on the VIX type of drop in volatility to form a triangle like this. And it just hasn't happened. So, you know, you get firsts all the time, and that's what makes trading so interesting. I still love looking at the markets every single day. And this kind of stuff is why, because there's something different. You know, there was some people, those of you that may be new don't know my background. My very first career was as a golf pro right out of college. I was a golf pro for 13 years. And then I started trading. That's the only two careers that I've had. And somebody said, well, is it because trading offers, you know, something different every day? Just like when you play golf, every round offers something different. You can play the same course every day and you have a different round every day. You're playing the exact same holes every day, but the round is different. You're in different spots, different angles, all that kind of stuff. I thought that was a good analogy. And so I've used it ever since then. I thought somebody came up with a really good point there. But yeah, I think that's what keeps it exciting. So now let's take a look at Bitcoin. And you've probably seen that Bitcoin has broken back down. We're back below 20. That is not good. It needed to stay above 20 over the weekend. We were looking at, all right, could it get to 24? We tried to break below this 20 level. We didn't get a follow through day. So it got back above 20,000. Could we come up and test 24? Well, the answer is no, at least not yet. And now we want to find out, is there going to be follow through to the downside below 20,000? If so, it starts to get kind of ugly because, again, 61.8% wave 5 extension here, which means that if it breaks that, it did hold, we got a bounce, but if it breaks that, then we're going to 100% extension, which is a lot lower on Bitcoin, maybe around 15,000, somewhere around there is what we would be looking for. We can go ahead and draw it out if you'd like to see where the exact target would be. Even lower than that, below 12,000 is a possibility. That would be something on Bitcoin, wouldn't it? Now, it has to have a follow through day before we start looking at that. So we could get back above 20,000 and see if it can rally from there. But if not, that is a possibility that Bitcoin almost gets cut in half from here. And you're already hearing about all those hedge funds, the Bitcoin hedge funds, the stable coins, everything is getting hurt really bad. Billions and billions of dollars are being wiped out of the crypto world. So I'm sure there's a lot of people that are hoping, you know, let's get back above 20,000. It's going to be really important. And then the lows here are at 18.5 are those two lows. Closing below that would not be good. So danger time there in Bitcoin. Looking at the EWA for Australia, be able to see that kind of hanging in there now. So it looked pretty ugly for a while. And that vertical move, we didn't get a vertical bounce, which you sometimes do. Often when you go vertically up, you come vertically back down. And when you go vertically down, you bounce back up. But when you go vertically up, you usually get 100% retracement on the vertical move back down. When you go vertically down, you usually get a pretty vertical move bounce, but it doesn't have to be 100%. But it's usually more than this. This was only 1 point. So we're just going through a mass consolidation here on the EWA following that drop. And the dollar weakening could help there for resources, et cetera. But right through there at 21 is very important. We're sneaking below that. You don't want to hang around below that for too long because it's kind of like hanging on a cliff with your fingernails. You know, eventually they're going to give way and down you go. So hopefully we get back above 21 there on the EWA. That's very key there. So looking at Canada, EWC, and holding in there at 33. So both Australia and Canada holding in at major points that need to hold. Australia just a little bit below it. Canada right smack here on it with a doji right there below the 10-day moving average. And so can we bounce from here? We have 100% wave 5 extension. which, as you can see, has held pretty well. But same thing occurs. We had a 61.8% B wave correction. So that would mean 161.8% extension to the downside. So the market's going to go somewhere in the not too distant future, but there's some ugliness below that is possible if we break those levels. So, you know, we could be talking about how the bottom was in. We had the corrective triangle following the low on the S&P, and we're rallying, and all this is a moot point. Or we could be saying, man, we've broken all those lows, and now it gets really, really ugly from here. Amazing, huge differences in the extremes, but that's what triangles do, right? When you have a triangle, you get a significant move in one of the two directions. We have an entire portfolio at Elliott Wave Options, EWOtrader.com, devoted to just the triangles, the volatility portfolio, because you can get these really big moves. The INDA for India, you take a look at that, and it's holding in there at 40, which is nice because it's off the lows, but also because that's another point of support, resistance. If it can get above 40 significantly, and a doji there, a little bit of a break below it, but held the 10-day moving average. So we're right at that 40 level. If it can get back above it, I think we come up here to 42. I think we test that 42 level. Same thing here is with the S&P. We had a 38.2% wave forward correction, 61.8% extension here. That's just classic Elliott wave stuff. Fibonacci Elliott wave is, I mean, it's textbook. It's what you teach. And so it's trying to hold and bounce. Don't really call that a triangle pattern there. Maybe a bit of a zigzag here to see if we can continue to move higher there. And we got right to the 100% extension. So we actually completed the zigzag. And now it's just trying to figure out, where do we go from here? These are the times when an Elliott wave pattern completes, and maybe it completed to the downside. We have a corrective pattern that completed. Let the next pattern set up. There's no need to rush in and try to force anything. Sometimes the best trade is no trade. Let the market come to you. Let the pattern set up. Patience. Let the patterns set themselves up. There's plenty of time to trade. You know, forcing things doesn't accomplish anything. Now the EWG, you know, down goes Frazier again here. I mean, it's just bad. There's no other way to put it. We jumped up here, got to the 10-day moving average. We're heading lower here. We had a chance there with this consolidation to maybe bounce up towards that 4 and label a 4. That was in the end of June. It didn't. It broke lower. We're breaking lower again. And I think there's a great chance before the summer's over that we're below 20 on the EWG. It just looks as bad as a chart could look at this point in time. So those are some of the international markets. If you have an international market that we didn't talk about, I'm sure you'll be asking about oil. So I'll just wait and let somebody ask about oil and we'll talk about it. Pretty eye-opening what's going on with oil, in my opinion. So I'll just wait. I'm sure Zach will come up with a question regarding it in a minute. But I did want to show you one of our alerts that we had sent out and closed for our alert subscribers on OLLI. This is where we just kind of pick and choose. This had been on our, as you can see the wording here, it had been on our impulse search for a number of days. And so at some point you don't want to ignore it when it's continuing to show up. So it was long calls in the impulse, which is our directionally based strategy. We generated nearly a 41% return in just 6 days. A really nice directional trade when, as you can see, the market has been doing absolutely nothing. So if you go back and look, here was the pattern on the entry there on the 17th of June, little doji here. God, you know, a little nerve-wracking there with the doji, but look how good this DMI is with the ADX moving up. It was only at 30, the positive directional indicator moving up, the negative down, great separation. That list looks really good. We weren't really that much overbought. Key breaking above 55 here. So holding it above 55, showing up on the search. It's like, all right, let's go. And boom. There you go. We had this big up day. That's a good time when you have a big vertical move like that, because you get a nice little volatility rush as well. And now you can see we hadn't quite gotten to 40 yet on the ADX, but the ADX was moving right in or just above the positive directional indicator, which can give you an indication that perhaps the strongest part of the move is over. So we took that opportunity to go ahead and take that gain. And if you want to see what's happened since then, so that was at 63.43, and we did pull back after that, and then it rallied more. And look where the ADX went. We would have never stayed for the ADX to go above 45. That's just way extended. But if you had withstood this move down, so the day we got out, we then came back down and we were several points lower, about 6 points lower than where we got out, and then it rallied again, and then we've pulled back. But you know, we don't look at hitting the exact bottoms and the exact tops. You try to take your chunk out of the middle, and when you get a volatility rush, we go ahead and do that. Again, we would never have stayed for the ADX to go to 45 anyway. 40 is an extreme level, so that was a pretty strong move. Now we'll see, can it hold it? It was awfully vertical here. It was almost, this almost looks like panic buying here. I would not be surprised to see OLLI come all the way back down towards 60 and maybe set up this wave 4. Wouldn't surprise me at all. So that gives you an idea of the things we're doing in our alert service. Now let's go ahead and take a look at some recent case study considerations here that we've done in past TradeFinders. RS, we did send this one out as an alert to our subscribers, and as I mentioned to you, we had adjusted that one to the downside, and it came and bounced up, and kind of a reversal day today. So it's hanging in there at these lower levels. We're going to give it an opportunity to see if it breaks that 160 level, because if it does, then it's Katie bar the door and probably 140 in a very short period of time. So we're going to give that one a little bit more time. And then HZO, we were looking at that one back on May 17th for an upward move. It did come down and make a lower wave 5, but it's bounced back up. We're not too far from where we were on the entry. So same pattern here. The wave 5 extended, but when you have a wave 5 that doesn't go 100%, you look for a correction back to the previous 4. So just a little bit lower level, but the exact same plan. Mosaic was one we also adjusted to the downside, and you can see that just it seems like it tries almost every day to move higher, and then towards the end of the day it just comes back down. I think it sees 40, and then we readjust from there. A lot of support at 40, so it looks like it just wants to march its way on down towards that 40 level, and then when we get there, we'll see how that one plays out. The XRT we looked at on the 28th of June, and so that's what it looked like. We were looking for something to the downside in the retail sector because so many retail stocks were looking lower, and we moved down significantly. So we were at, the low was 61 on the 28th. We got down to a low of 57. So if you come back and look again, it's not quite the 10% move, so I wouldn't have faulted you if you stayed in. We do like to see a 10% move out of the stock. We've just bounced back up here to support or resistance, however you want to view it, at 60. So it was support, now resistance. See if it rolls over and continues lower. Based on some of the retail earnings, I don't think that would be a shocker to see it move lower. So it moved lower immediately, then back down. And here's another reason. We looked at Dollar General last week, and so we were at 250. Our target was to test these recent highs up here at the 260 level, looking at a pretty decent looking DMI. And I don't know if you saw this one today, but we were almost there. We were almost to 260, and we had a bit of a reversal today, but just back to the 10-day moving average. It did close below it, so we'll see how that plays out. But you have to pay attention. It's a 2.5% move to the downside today. So it had been trucking up nicely. We got as high as 256, 80 there, so nearly 257, so almost to the 260 level. Now we want to see if this follows through to the downside tomorrow. maybe just get out of this one. Should be about break even if it rolls over again tomorrow, maybe just a little bit of a loss. But if you see follow through to the downside there, then we get out. And now if that's not doing well, what in the world in retail is? So I think that's where that XRT could show an even further move to the downside. All right, so that gives you an update on, there's only a handful of them. We've closed out so many of our recent case study considerations. Go back and look at past TradeFinders. The record on the case study considerations is pretty darn good. Let's see what we can find here. So we click on pre-computed scans, and you may know this Elliott Wave options here in this profit source program. That's because a lot of our Elliott Wave options subscribers also have this software. Perhaps it's because I use it, or perhaps they just liked it on their own. But the folks at Hub said, hey, if you're an Elliott Wave option alert subscriber and you have the software, then we're going to create these searches for you, more pre-computed searches, which basically save you a lot of time. You can create your own search, your own combination of indicators. You can run it. You can go back test it. You can create trading plans with paper account type monies in them, see what happens, all kinds of things like that. But it takes a little bit to run a customized search. When you have a pre-computed search, they're instantaneous. They just show up just like that. So let's see, there actually are two still bullish even after today. And this is really interesting, isn't it? Yesterday, all of the home builders were there. It seemed like all of them. There's still two there. So when you see that, it's kind of like what we looked at with the XRT on the retail side. Maybe we want to look at the XHB, right? The home builders. When you see multiple ones, and again, it seemed like they were all on there yesterday, still two today. Now let's take a look and see if the DMI has triggered yet, because that was one of the hold-offs, and you can see it hasn't. The ADX is not broken above 20 yet. Now that's the key for the trigger. It has broken above the negative directional indicator. The positive's moving up. They're separating, which is good. The ADX is moving up between those, but the last piece is that the ADX needs to move above 20. So we continue to watch this, but look at that. That's a pretty impressive move. In the home builders, why? With interest rates going up, the 30-year, the long end is steepening. Perhaps this is the last hurrah, with people saying rates are going up. It's now or never if we're going to buy a house. Really, really interesting to see this, in my opinion. So let's take a look at the XHB and see what the ETF looks like. And the DMI is just not supportive there like it is for DHI. And let's look at Meritage, see what that chart looks like. And we're gonna have the same thing. I normally would like, let's just do the XHB, but the pattern's just not there in it. So crazy to me that so many of these home building stocks have these nice move zigzags back up here to, in this case, major resistance right there at 80. You can see all that right in that area. See if I can draw this arrow for you there, this line. So right here from 80 to 85, you can see all that resistance. Now the key is that we've broken above 80. You can't ignore that. Now look at the difference here. The ADX is above 20 here. It got just below 20, which I like. If you've heard any of my videos and my commentary on the DMI, when you change a pattern, in other words, we're moving from downside to upside, the ADX was obviously moving up because the pattern was moving down. Remember, the ADX does not show direction. The ADX shows strength of the trend, strength of the move. So the ADX rising was showing there was strength to this downward move. Well, now the ADX is curling back up, which is telling you, okay, now there's strength to this upward move. And I like it when there's a change for it to come down when we're getting ready for the transition, if you will, in direction, kind of like a golf swing. When you transition from your backswing to your forward swing, you look for this point of the transitional change, and I like to see that below 20. It just barely is. So you have to be impressed with the fact that it's above 80, Can it continue from here? Well, the wave 5 is 107%, which means now we're not looking for a retracement all the way back to the previous 4. What we'd be looking for here is a 61.8% bounce, and that brings you up to around 87, 88. And you can see back over here, there's a bit more resistance there from February and March. And that also gets us to the very top end of this range here between 80 and the 85, 86 area there. So a little bit more of a bounce, not significant, but you know, it's hard to imagine, I think, but the pattern's there. So let's take a shot at it and see what it does. So for the case study for today, we'll look at MTH, Meritage Homes, with a movement up to 87. That's what we would be looking for to see if it can continue. And the DMI would be supportive of that. What would be the negatives? Well, the negatives are a ton of resistance in this area. So can it power through it? That would be impressive. Maybe it needs to go sideways for a bit. You look at the moving averages, we are just a touch over bought. Maybe see if you get a little bit of a pullback in the morning when the market opens to take a look at that. And as long as we can stay above 80, that to me is a go. If, so we'll put this caveat in there, if by chance we open below 80 in the morning, that would be a no-go. And so that would be your stop. If it doesn't break below 80 in the morning, maybe it pulls back a little bit towards 80 and gives you a good entry, but a close below 80, you're probably looking saying, okay, that's my stop, and close that one out. So there's still a little bit of iffiness here because of all of the congestion that we have here, but you can't ignore that zigzag move to the upside. You can't ignore the strength from the DMI, and sometimes, I shouldn't say sometimes, often the market does what makes no sense. And to me, the home builders having a surge here makes no sense to me. We've had multiple inversions of the 2 and 10 indicating recession. Federal Reserve is raising rates. Interest rates are going up. The only part of that makes any sense is that this is where we got a bit oversold. We went vertically down, so we got a bit oversold. And there's one last hurrah of home buyers before the market gets away from them with interest rates. All right, so with that, Zach, I'll go ahead and open it to some questions now for the last few minutes.
Absolutely, sounds great, and thanks for that presentation, Rob. I will say we've had a lot of positive feedback in the chat, especially from YouTube, of people showing their appreciation for our overall presentations, especially you, of course. So just want to make sure that we pass back our thanks for that as well. And positive feedback really does go a long way.
It does, and appreciate that very much. So thanks to everybody.
So let's start out by referring back to what you mentioned earlier, and let's look at oil. Stephen brought up oil, and Francis asked if anyone's shorting oil yet.
Yeah, I figured oil was going to come up. So, man, it sure would be tempting right now, wouldn't it? We bounced back up to the 10-day moving average with a doji. I thought we might at least come fill this gap here, and we didn't. That surprised me. It's just like the sellers did not want to see oil or USO get back above 80. They didn't want to see it, and so they stepped in even before filling that gap, even before hitting 80. So we're just dangling there in no man's land, as you can see. 70 has a little bit of support. So from here to 70, it's not significant. We've broken through the most significant part of the resistance on the way down. And you can look at this zigzag pattern here. We are at the 100% extension. So I would say that with potential support between here and 70 and the 100% extension, maybe just watch it. We're a little oversold with today's drop from the 10-day moving average, not significantly, but look what happened last time we got down here. See how it bounced right back up to it. I'm thinking that you might get a little better entry. Maybe it would bounce back up towards 77 or so if you wanted to short it. An aggressive move would be if we came back up to the 10-day moving average and go short there, because if we break 72, it's coming down to 64. It's going to be 161.8% extension. So you can say, well, there's plenty of room there for a downside trade. So maybe I just want to wait. And that would be a more conservative approach. Wait and see for it to break 72 and then step in. Or an aggressive move would be on any bounce. If it doesn't give us that bounce, which it doesn't have to, it's a little oversold, but not significantly. But if we start breaking below 72, that would be a pretty good entry there as well. This is mind-boggling to me for this to be occurring fairly early in the summer driving season. I know we're kind of past halfway, and people are going to start looking towards, back to school in August, and demand will probably come back down. The market does always look ahead, but this has been really eye-opening to me to see this kind of a move back to the downside. So this is the key here. If it doesn't hold here, then it does look like a pretty decent short, but there is a chance that 100% extension holds, and this is it. We just came back down to this area. We completed the retracement back towards that previous 4 and then head back higher. But 72 there, from 70 to 72, super important there on USO, but really, really interesting chart.
Yeah, there's no question there. It'll be interesting to continue to watch and find out what happens with that one.
Yeah, and I mean, the thing is that, prices are coming down at the gas pump now. They're still elevated, don't get me wrong. I'm not trying to say that, but they're way down from when it was at $5 a gallon everywhere. The average being $5 throughout the country at one time. So it's come down quite a bit. So from a demand standpoint, I think that ekes of a recession as well. So, we'll find out on the 28th is when the GDP report gets released for the second quarter of 2022 to see if we have an official recession or not. And I know you all make your comments on YouTube, and I agree with you. Whether or not it's labeled as an official one or not, it sure feels like we're in one. And then this is just adds to it.
It sure does. And like you said, they are down a little bit. So thankful for that at the moment. Just, again, going to have to see where this one ends up. So we'll transition back over to Zoom. And Thompson, this is in reference to the SPY. It says wave 5, or are we going to have a prolonged developing wave 3?
Well, that would be a good question. Does this 5 relabel to a 3? That's always a possibility. I think a lot of that will be determined on how volatile do we break out of this triangle. If it's a really vertical breakout and we just slice right through that, I don't read the algorithm. I let the software do it because it's 20 to 30 pages of just pure mathematical code. That's what the Elliott wave algorithm is. It's really amazing to look at. But just from past experience, I would say that it depends on the significance of the breakout, whether that 5 would relabel to a 3, because if we break to a new low, it could just label a new lower 5. So what determines whether or not you have an extended 5 or relabels to a 3 is all in the algorithm. But if it's a pretty volatile break to the downside, that is a possibility. So if you're wondering, could we go significantly lower? Possibly. It's just such a good Elliott wave pattern right now, though, with a 38.2% wave 4, the 61.8% wave 5, a corrective triangle. We have to respect the fact that this could break to the upside as well. And, it doesn't get nearly as ugly and gloomy as it feels. Maybe this is, it's not going to wait till the 28th. There's no way that triangle goes that far. I don't think it's too well formed to see if it's an official recession or not. But that is a possibility. But it's a possibility that it's done as well. We got to get the break out of the triangle. So when I say, well, you're just playing both sides, the market, that's what the market is telling you. It's hit fib levels. It's hit Elliott wave levels. It's correcting like it's supposed to happen after this. Let's let it do its thing, and it'll tell us which way it's going to go. I'm not going to guess on which direction that breakout is going to be. That's it's just flipping a coin if you do that. So, but yeah, the answer to the question is it could break lower. That 5 could relabel to a 3, meaning that there's much more to the downside to come. We just have to wait and see.
All righty, thanks for that. We'll transition back over to YouTube. And Ace says, yo, this latest COVID wave finally got me. So I'll pause there and say that we wish you a speedy recovery here at Elliott Wave Options. And says, what are the chances that this is the last bit of freak out over COVID? So just interested to hear your thoughts in general about what you think the impact on the economy is going to be.
Well, China is shutting down again. I did want to talk a little bit about China tonight with you as well, because just as soon as the last couple of weeks I've been saying China is finally, cutting back on all the government restrictions and all the craziness that they were coming after their big companies with fines and regulatory actions, and it seemed like they were backing off, and then they do it again. And you saw what happened with the China stocks, Baidu, Alibaba, all of them making significant moves lower. Now, that's kind of an odd thing because I think the fine was like 150,000 or something, which is nothing for Alibaba, right? I mean, that's probably in their petty cash. So why did the stock get hit so hard? It's hard to understand, but it may hold that 30-day moving average. But I'm getting off the subject, and I know the question is this the last hurrah for COVID? I don't know. I mean, we're getting a spike in Florida as well. The cases are moving back to the upside, and my tangent was because some areas of China, Macau, where all the casinos are, is shutting back down again. So they're going through another shutdown. I know Australia is seeing another spike in cases. Nobody thinks that they'll shut down there again, but you never know. I think COVID's here. It's going to be something similar to the flu moving forward. It's never going to fully go away. I'm a little surprised to see this spike, and I guess there's no way to know. To answer your question, and I'm sorry you got it. And I've known a lot of people recently that have gotten COVID. Some that didn't get affected by the first couple of waves that went through, the initial wave, and then that Delta variant, the next variant. They survived all that, and then they got hit now. So I don't know. And I know that part of what happened in China, they had one case. Was it Shanghai or someplace had one case of a new variant, and boom, they just locked it down, locked the city down over one case of a new variant. So I don't know that this is the last hurrah. I wish I did. I wish it was. I hope it is, but I don't know that. And yeah, I think if the spike continues, then it could get to the point where it starts to affect, and we don't need any more dings to the economy, do we? Not with rising inflation, rising interest rates. We don't need any more hits to the economy. So that would just be piling on if COVID starts to create problems I don't think we shut down anything, but if it starts to create problems for restaurants with people going out, if mask restrictions come back, who knows? It is interesting, though. I think that's an unknown right now, but thanks for bringing it up, and feel better.
Yeah, absolutely. Lots of external factors. And as you said, they are unknown at the moment as to how severe they will become. Next up, we'll go back over to Zoom. It's a fun one that we looked at recently, but always an interesting one to bring up and analyze. From Martin, would like to look at Meta. So I think that might still be Facebook.
Yeah. Big downgrade it got today. Didn't affect it at all. Look at that triangle. I mean, we're still looking at that triangle. Look like it kind of tried to break out. So this is one where, let's see, did the DMI come low? See, now the DMI is trying to, it was so stubbornly holding up above that level. Now it's trying to get down there towards 15, and it did, didn't it? So it's broken below that level. If you have a larger account, that's probably a really good strangle, because that's a great look at that triangle pattern. So with the ADX now breaking below 15, the size of that, it's from 170 to 230, which is being conservative, 60 points. And normally we look for a 10% breakout here of the triangles as well. So if it's a $200 stock, we'd be looking for a 20-point potential breakout move. So that's 3 times what we'd be looking for with a 60-point potential move. So a larger count with our strangles, with the out of the money calls and puts, that looks like a great trade to me. And it just blew off the big downgrade that it got. It's like just blew it off. No, well, let's maybe we have switched over to, no, we haven't. That's back into June, so that's not a current chart. I'm gonna have to find out, because
it's Round Hill Metaverse when you typed in meta there.
Yeah, so that's not it. So I have to contact
look into that one.
Yeah, Reuters, and find out what's going on. Maybe it did break out to the downside. Let me take a look here.
We are aware there has been a delay or two with Refinitiv, so it could be something to do with that.
Yeah, because it's a different symbol, different company with the same symbol. Yeah, no, it didn't affect it at all. So let's go back. Yeah, it did break to the downside out of this, but today actually finished slightly to the upside. So we did get a downside breakout of that triangle. So if anybody took advantage of that, that was a nice move. It broke down to 163, so it was 40 points. That would have been a great trade. That's a good example anyway. So I think to answer the question, when you get a massive downgrade and the stock actually finishes slightly up, the bottom is probably very close to being in. So that's where I'd leave that on Meta, Facebook.
Thanks, Rob. We got some more questions coming in here from YouTube. Here's one that I believe I might already know the answer to from TGO1. It says, Rob, any preference on the CCI and or ADX DMI oscillators?
I like them both, and they are 2 of our favorite indicators. Basically, what we do at Elliott Wave Options is we because of our name, you already know Elliott Wave is a big deal. That's our primary indicator. That's our primary trading system. But I've often said and always said and fully believe that no trader should rely on any one technical indicator. I don't know how good you think it is. Don't rely on any one technical indicator. So we use Elliott Wave as our primary indicator, and then we have a support system of other indicators that back it up, of which the CCI and the DMI are 2 of them. So do I have a preference between the 2? They complement each other, because with the DMI, the 2 directional indicators are very responsive, but the ADX is lagging. With the CCI, it's very responsive day to day. So the 2 together work really well. If you have like a more volatile move, the DMI is telling you the strength of the trend. Because it's slightly lagging, it may not be quite as responsive to a change in the trend, etc. But the CCI is. And so that's what you want with your technical indicators, is when you have multiple indicators, you want the strength of one indicator to fill a weakness of another. And I'm not saying that being a lagging indicator is a weakness. Moving averages, all kinds of things are lagging. Basically, that's what technical analysis is for the most part, right? It's analyzing what's happened, trying to figure out what's going to happen from it, but they mesh together really well. So I can't really pick between those. You need them both, I think. I think they work extremely well together, and that's why they're in our technical system of confirming indicators. along with CMF and 1030 crosses and a few other things.
Alrighty, thanks for that, Rob.
Yeah, thanks for the question.
Absolutely. Another fun one here for you from Trading Vibes. I'd like to look at Amazon.
Let's take a look. It's really good to look at after last week, and kind of surmise this might happen, right? It had its nice little bounce, and it needed to get above 120, and it couldn't do it, right? I think it was either last Tuesday or Thursday night in our insiders meeting that we were looking at this, and if it could have broken above 120 there on the move, we had something significant going. But now it's just in a trading range. So could you put a butterfly? I think you could on Amazon, because they've just, with that big huge split, it's going to be tougher for a while with people that are wanting to buy at the lower price and people that are wanting to sell off some of their shares. Perhaps you could put a butterfly around this. It wouldn't be the worst looking trade I've seen, for sure. But anyway, the bottom line is it's got to break above 120 before it gains any traction. And if it breaks below 100, look out. That would be hard to imagine, but it's possible. That would be a really significant recession for Amazon to break below 100, in my opinion. That would not be a good sign for the economy. It would surprise me, and it would be that means nobody's buying anything. But it's hard to go long until it gets above 120.
All right, thanks, Rob. So we will come back over to Zoom. I see we are at 5 minutes after the hour. So as always, I'm happy to stay on as long as you are. You just let me know.
Let's do 2 more and let everybody go.
Sounds like a plan. So the first one will be from Constantine from Zoom. And it's just a general conceptual question of, could we have a sideways market? And if not, why?
If we didn't have such a really good triangle, I would think that we could. The triangle is just telling us that we're going to get a breakout. Now, after the breakout, we could go into a trading range, or we could break out up to here, because that's about the size of the triangle. If we break to the downside, I think we're right smack in the middle of that tap box. So that's kind of the range of what the triangle is telling us. So we could bounce around between this area for quite some time, but it's not as tight we wouldn't be as tight of a sideways market as we're in now. So if we bounce one way, then we retrace that breakout at some point. So somewhere between 360 or 350 and 410, somewhere in there could be a range for a while. It very well could be, but it's not going to be tight around 380. We're going to move off of this in the not too distant future.
All righty. Thanks for that, Rob. And I just wanted to say, again, there's tons of more positive feedback coming through, especially from Bears versus Bulls, saying I really appreciate his knowledge and time. Couldn't ask for a more pleasant person to be learning from.
Wow, thanks. I appreciate that. I appreciate that very much.
Absolutely. Yeah, I'm looking forward to these future sessions and seeing how far we go into this recession era that we seem to be experiencing. So I think a good question to end on, and it's kind of a continuation to the last question, is from Will on YouTube saying, can a full-blown crypto crash take down the stock market? We're almost there. So I wanted to hear your thoughts if you think there's any association there.
I don't think it can take down the stock market. Can it dent it and hurt it? Yeah, because there's so much leverage. I mean, I've been reading a lot about it. Zach, more about the crypto world than I do, I think, but I've been just doing a lot of reading about all these hedge funds. There's so much money. So what's happened, and you can say, well, why would crypto have anything to do with the market? Well, there's been a lot of money from the equity market, from mutual funds, et cetera, that have more aggressive investment objectives that have the opportunity that have been investing in some of these Bitcoin funds. So some of their aggressive money has gone into these kinds of Bitcoin hedge funds that popped up, et cetera. And with those collapsing, it's a snowball effect, right? They can't make their payments back, the interest that they were supposed to get paid into these other funds, et cetera. So I don't think it takes down the equities market. Can it hurt it? Yeah, for sure. Based on the analysis that I've been doing and what I've been reading, as far as I didn't really realize how much had gone over there. And now there's a lot of scrutiny, and I think you're going to see a lot of regulatory action of should they have been doing this? Were they being a little too risky by putting such significant amounts of money into these Bitcoin hedge funds, et cetera? So a full-blown crypto crash definitely hurts the equities market. I don't think it tanks it or crashes it, but it could definitely send us for a new leg lower for sure. That's a really good question. Thanks, everybody. Thanks for all the nice comments. Appreciate that very much. And I appreciate your time. As you know, I say this and I'm super sincere about this and really passionate about it. Time's the most valuable asset we all have. I appreciate that more and more every day as I get older. And so we really appreciate it when you spend some of your valuable time with us, and we do our very best to make it an informative and educational use of your time. Thank you so much. Have a great night. Look forward to talking to you again next week.